Hello, you're welcome to my YouTube channel. Here we issue out value back to back. In today's video, we'll be discussing the various type of traders. Yes, type of traders. You might be surprised, but yes, because the way trader A trades is not the same way trader B views trade and try to enter and exit a trading position, right? So but at the end of the day, every trader is unique and has a different trading style, right? And the main goal of every trader is what? Becoming profitable. So I'd also like to ask you to watch till the end of the video, because by the end of the video, you yourself, you'll be able to decide what kind of trader that you actually are, right? So let's get into the different types of traders. We have the scalpers, the day traders, the swing traders, and the position traders, right? Now, between the scalpers, the day traders, the swing traders, and the position traders, the only factor that is differentiating them is what? Time. Time is the only factor differentiating these four main type of traders. Time. They vary by how long positions are held in the market and also their trading strategy. Alright, so the number of duration that a scalper can stay in the market is not the same thing with that of a swing trader. So let's get to understand the different type of traders. Are you a scalper? Do you know if you're a scalper? So let's see. For a scalper, the trading duration of a scalper is between seconds to minutes. What does that mean? It simply means that a scalper enters the market and just stay within few seconds to few minutes before they'll be able to exit with a profit, right? So in this trading type, a forex trader opens and closes position within a very short period of time. As you can see, it was very stressed, like that, very short. Scalpers open and closes position within a very short period of time, say what? Seconds to minutes. Now, the trading type involve a lower risk, yes, because when compared to other forex strategies now, because traders has less exposure to big events. So they just come into the market, look at what is happening, it's ranging bullish or it's going in the bearish direction, they'll just enter the market and exit immediately with some profit. So they're just like kind of tapping into what is on board already in the market. So these are scalpers, right? They stay just very few seconds to minutes before they exit the market. Now let's move to the second type of a trader. We have the day traders. These ones stay just within a day, within the same trading day, right? So day trader can also be referred to as intraday traders. Now these are traders who open and closes position within the same trading day. They open and close position within 24 hours with either a profit or a loss. Yes, they typically close all their position before the market closes, hence avoiding overnight market risk, right? So they don't take day traders don't transfer their trade to the next day. They typically closes all position within the same day when they enter the trade. So these are day traders. We move to the third type of traders, the swing traders. Now this trader takes several days to few weeks before they open and closes a position. This type of traders holds position for several days to a few weeks, seeking to profit from short to medium term price trends, right, of fluctuation. So they just open a trade. They can stay up to 1 day to 2 days to 3 days to 1 week to 2 weeks, seeking what? Profit from short to medium term price trends, right? These are swing traders. So they are entering and exiting of a trade can last from days to weeks. Now the fourth type is what? The position traders. So these are the Kongus, the babas, right? So the trading duration here is not even it's not like, if you don't have patience, I don't think you should find yourself in this kind of among this kind of traders. The trading duration for this kind of traders, it lasts between weeks to months or even years, right? So they hold position for weeks, months, or even year, and aiming to capitalize on what? Significant price trend. Now this kind of trader can just even enter only one trade or two, maximum of 3 trades in a whole year. these are position traders, right? They enter a position aiming to capitalize on significant price trend. Now, no matter what type of trader you are, the most important thing is what? Having a well-disciplined risk management plan. Because you cannot just have a $1K account and you want to use a 5 standard lot size to start trading. Be it you a scalper, a swing trader, or a position trader, right? So no matter what trader you are, the main thing is what? Having a well-disciplined risk management plan. Risking what you can afford to lose, because you see many traders trying to commit suicide, but when you risk what you can afford to lose, there will not be need for that. So the next thing is to set a stop loss. Then use a well-planned, a well-appropriate position size when you're entering a trade as regard your account size, right? And also you can also learn from your mistake and stay informed, right? Because once beaten, twice shy. You can't allow a particular mistake to keep happening to you. So that's why it's always advisable for you to do what? Document your mistake whenever it happens, and try as much as possible to avoid such kind of mistake, and also stay informed, right? So finally is also what? Stick to your plan and don't do a revenge trade when you lose, or chase price as you might lose more. When some traders are fond of that. When they lose trade, when they got burnt off, they try to revenge, they try to re-enter the market even when the setup is not there, even when the setup is not clear, they try to re-enter the market, right? So stick to your plan, right? So finally, apart from the scalper, the day traders, swing traders, and the position trader, traders can also be categorized based on how they approach to the market, like the way they see the market. Now let's discuss this, and by the end of this discussion, you'll be able to know the kind of trader that you actually are. So based on approach to the market, we can also classify traders as mechanical trader, discretionary, and hybrid traders. So what are mechanical traders? These ones rely on what? Technical indicators and chart pattern, like already overlying rules, right? So mechanical traders make use of predefined trading system. They often use indicators, often relying on technical indicators and chart pattern, right? Something that has already been set up in use. So these are the kind of traders that we call mechanical traders, right? They depend on chart pattern, pre-existing chart patterns and indicators. Now, what about discretionary trader? They use their experience, right, to judge and make trading decision. These kind of traders, when they see a chart, they don't need any indicator or analysis to just look at the market and know by their experience if this market is going to be bullish or bearish, right? They just make this decision. Now, a hybrid trader is those kind of traders that combines the two features, right? They combine these two approaches to enter and exit a trade. All right, so they make use of the predefined rules and also make use of their experience and judgment towards the market. So among these three types of traders, I would like to ask you, which kind of trader are you? Are you a mechanical trader, a discretionary trader, or a hybrid trader? And also, based on the duration of time which you enter and exit a market, can you call yourself a scalper, a day trader, swing trader, or a position trader? Thank you. If this video was helpful, please do not forget to do what? Subscribe to my YouTube channel and do what? Turn on notifications so that whenever I post such educational video, you also will be what? Notified. Thank you.